You've been right on the direction of the market for a long time now. Tom, you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed, worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
But, and we were just talking about this, Treasury yields at the highs of the year, dollar at the high of the year, those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
Tom, first off, Happy New Year. Good to have you on. How much is the rest of the world's problems benefiting the United States? Sarah kind of alluded to it at the top, which is this is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, China's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
It's hard to link causality. I mean, for a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? I mean, outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S.
In a world where AI advancement might just become our new reality faster than expected, Ibiden Co, a key player in the semiconductor supply chain, is taking dynamic steps to capture this momentum. As a vital supplier for the tech titan Nvidia Corp, Ibiden is currently weighing options to speed up its production capacity expansion. With big names like Intel Corporation, AMD, and Samsung Electronics as part of its clientele, the stakes are high and the moves bold. Could this be the beginning of an AI revolution in the stock market? Stay tuned as we unravel this thrilling story. Welcome back, everyone, to Investocracy.
Do you worry? I mean, we showed some of these gains, Tom. Listen, you're Tom Lee. You don't worry about a whole lot of things. But I would say when we're looking at stocks that are up 550% and 300%, okay, there are paradigm shifts which will bring in a lot of money to new things. Is there any part of Tom Lee, not the drummer, that does worry that things are a little bit hot at 40 times forward earnings on many of these, like an Oracle, a name that we didn't talk about much for years?
I mean, at some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well.
In the ever-competitive stock market, Ibiden Co. stands as a compelling narrative of preparedness and aspiration. Picture this. Demand for AI chip package substrates isn't just high, it's soaring, with customers eagerly snapping up every sliver of stock available. CEO Koji Kawashima, the mastermind steering Ibiden, has highlighted that this demand is not a fleeting whim, but a robust trend set to spill over into the next year. Amidst this backdrop, Ibiden's initiative to construct a new substrate factory in Gifu, Japan, which will start at a humble 25% capacity by late 2025 and march toward 50% by March 2026, is a calculated move. Yet, with demand gushing like an unstopped torrent, even these measures could fall short, a scenario they're acutely aware of, prompting discussions on ramping up the remaining capacity. Now, if you're imagining a scene from stock market comedy, picture brokers running around like headless chickens yelling, "Buy AI stocks." But in reality, the scenario is as serious as a boardroom meeting in a suit. Ibiden's clientele includes heavyweights like Intel and AMD, showing that this isn't just another tech bubble, but a substantial shift toward AI innovation. Hideki Yasuda, an analyst at Toyo Securities, echoes this sentiment by affirming Ibiden's stronghold amidst rampaging Taiwanese competitors eyeing the AI substrate market. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
But you're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet.
One point I'll just raise on the skeptical note, which is on the call for small caps, Tom, which a lot of people were on the small cap bandwagon this year, and there were times where that really worked, but I don't know if December's a preview of what's to come. Small caps are still down 7% in December as the S&P's gone flat. NASDAQ far outperforming on the year, the small caps. Everyone hoped this was the time where the rally would broaden out, but then when the Fed pared back how many rate cuts it was going to get next year, small caps didn't work. So what makes you think that this will be the year?
Well, that's a really fair observation, Sarah. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December.
Diving deeper, we find Doug Lefevre of Advantest painting a contrasting picture. His cautionary stance on a potential slowdown in AI spending by major U.S. tech firms reveals a looming challenge: the notorious cyclical nature of tech markets. It's a potential downturn that could become what Lefevre describes as vicious. Yet, with the likes of Broadcom's CEO Hock Tan projecting a decade-long boom in AI chips, there's a dichotomy in views, one that investors find both thrilling and perplexing, much like a Shakespearean drama unfolding in real time. Present data backs these evolving dynamics. The AI market, led by giants like Alphabet Inc. and Meta Platforms Inc., is charging forward, investing billions and fueling optimistic forecasts. As Ibiden charts its course by expanding production, it navigates a complex labyrinth of potential risks and opportunities, making them an intriguing watch for investors worldwide. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance since 1998, and then before
that's
that,
not necessarily bullish. I mean,
well, actually, it is very
reasons,
bullish,
right?
Sarah. It's super bullish because if you go back to 1900 and use FAMA data, it's the second worst in history. If you take the three worst instances, never have small caps underperformed the next 3 years or 5 years. So what we've done is essentially discounted so much bad news. There's so much skepticism. I think almost everybody that talks about small caps says, well, they haven't worked, so they're not going to work. They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high. at a time when skepticism's high. I mean, isn't that what FANG was at the start of 2023? I remembered how many people said, put a fork in FANG at the end of 2022, they're done. And they just put in the 2 best years I think anyone could have ever expected.
In conclusion, Ibiden Co. stands at a fascinating juncture. As AI demand skyrockets, they're poised on the front line, ready to scale their operations amidst a maelstrom of opportunity and cautionary ceilings. Now, savvy investors might need to ask, is this an alluring dance of risk and reward that warrants investment? Amid whispers of a potential downturn, the steadfast optimism about AI's future shines brighter than ever, grounded by concrete growth metrics and market projections. Taking stock of where Ibiden currently lies, steady, vigilant, and optimistic, it's clear they foresee great potential on the horizon. As they navigate this ever-shifting landscape, their positioning within the AI supply chain not only encapsulates substantial promise, but ensures they remain an essential entity for tech enthusiast investors. So, as we stand on the precipice of this AI revolution, what do you think? Is it time for this market wave to be ridden with Ibiden at the helm, or is cautious observation the order of the day? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.